There have been various factors causing a drag on European equities this week, preventing Europe from riding on the coattails of impressive US earnings. Most governmental elections cause a stir in the markets, so when President Nicolas Sarkozy was defeated in the first round of the French presidential elections, investors became concerned about the uncertainty and the potential instability for this key European economy. And this manifested in risk asset declines on Monday. The sell-off was exacerbated by political chaos regarding the Dutch government's finances and really disappointing manufacturing and services data across the Eurozone. The Netherlands are one of only 4 countries in the Eurozone left with the coveted AAA credit rating, meaning any downgrade could have significant consequences on the rescue fund, aka the EFSF, and its appeal to investors. Moreover, there can ill afford to be any concerns over the robustness of the EFSF, as Spain could be now on a slippery slope after they were downgraded 2 notches by the S&P credit rating agency. Spain sold 3-month and 6-month bonds on Tuesday that were in relatively high demand, although it begs the question as to how much real demand there actually is, as reports indicate many Spanish banks are being encouraged to use the ECB's 3-year loans to buy Spanish government debt. Despite the high demand, Spain's troubled finances couldn't prevent their borrowing costs doubling compared to the previous auction of the same maturities. This trend cannot continue, otherwise the euro breakup scenario will be firmly back on the table. Another blow for economic growth came in the form of a 0.2% fall in the UK's GDP on Wednesday, which signalled a technical recession, which is defined by 2 consecutive quarters of economic contraction. Much of this was already priced in, as the effects of the economic slump in Europe on the UK are being felt by businesses all across the land. Across the Atlantic, equities have made bigger gains, mainly driven by a continuation of better than expected quarterly results from US firms. Over 70% of S&P 500 companies that have reported so far have beaten analyst forecasts, which has been a huge catalyst for equities against a worldwide backdrop of sluggish economic growth. In spite of earnings figures, investors should remind themselves that the bar has been set rather low for earnings estimates, making it relatively easy for firms to deliver welcoming results. Boeing and Caterpillar were amongst the big names, posting significant rises in quarterly profit, 58% and 29% respectively, and beating forecasts. But the most valuable company in the world, Apple, managed to take the limelight again as they reported a 94% rise in profits, boosted with sales of its iPhone and iPad in China. The FOMC staged a press conference Wednesday afternoon, which had a positive impact, as Bernanke explained he would instigate further monetary stimulus if progress in the economy faltered. There are inflationary concerns amongst members of the FOMC due to the elevated oil prices, who believe interest rates will have to be raised before the provisionally scheduled end of 2014. Although in reality not a lot has changed, as the Fed is waiting to see whether the economy will stay on track before taking further action. Nonetheless, Bernanke's comments weakened the dollar and has been pushing pound dollar higher and even euro dollar to a lesser extent, but any bulls on these markets should be aware that the dollar could quickly turn to being a safe haven asset once again if the euro debt saga intensifies. The US weekly jobless claims have been confusing lately due to a number of revisions, but it is clear there has definitely been a blip in progress, as the number of claims have been rising each week since the low of 348,000 jobless claims achieved 5 weeks ago. Amid the dissatisfying economic data from both sides of the pond, it was pleasing to see a significant improvement in the US pending home sales, up 4.1% for March, which is further evidence that the housing market is stabilising, with a possible bias to the upside, which should provide a strong platform for the US economy to continue improving. Equities moved cautiously higher Friday morning in anticipation of the first measure of GDP in the States, which was lower than expected by nearly 0.5%, but didn't seem to worry investors as the markets held their ground. In regards to specific equity news, BHP Billiton, the world's largest mining company, faced a $5 billion charge on its recent shale gas acquisition, jeopardising the future of CEO Marius Kloppers. Vodafone agreed a deal to take over cable and wireless worldwide at 38 pence per share, and said the acquisition will lead to cost savings by not needing to lease so much fixed line capacity from companies such as BT, and also added that they will now be able to offer a wider range of services and tap into the fixed line services for multinationals. ARM Holdings, who design microchips found in most mobile phones, have benefited from Apple's success as its quarterly net profit jumped 74%, and Rolls-Royce have been awarded another huge contract worth $598 million with the US Department of Defense. Overall, this week has highlighted the resilience of the markets despite the headwinds of austerity, debt and economic growth, and implies investors, due to being unable to find a satisfactory yield elsewhere, are choosing to buy stocks even though growth is slowing across the globe. Looking ahead to next week, on Monday, the main economic figures scheduled are German retail sales, US personal spending and a manufacturing PMI from the Chicago area. On Tuesday, there is a French, German and Italian bank holiday and manufacturing PMIs for the UK and US. China are releasing a manufacturing PMI early Wednesday morning, and later in the morning is the UK's construction PMI and US ADP employment change and factory orders in the afternoon. UK services PMI is due Thursday morning, and an ECB press conference is scheduled for 1:30 after the interest rate announcement at 12:45. And finally, the all-important non-farm employment change is at 1:30 on Friday. Thank you.